13% of the NASDAQ 100 as well. We got the NASDAQ turning lower here in these final seconds before the opening bell as well. And there they are, the opening bells and the CNBC real-time exchange, which you can see right there on your screen. So here at the big board, executives and guests of Syracuse University, the University of Minnesota, and the New York Yankees in celebration of the Bad Boy Mowers Pinstripe Bowl. At the NASDAQ, you've got New York Cares, the largest volunteer network in New York City, ringing the bell there. And right now, out of the gate, Scott, it looks like it's a little bit of a mixed picture because the NASDAQ is slightly lower. The S&P is just north of the flat line as well, and the Dow continues to be the outperformer here.
I'm sure you can guess which stock I'm going to mention first. It would be Tesla, because it is up today again. We said it's down 7 straight days, and it's been down 10 of 11. But you're getting a little bit of some bottom feeding here, although as I'm watching it, it's just teetering around, Mike, the flat line. It's going to be so closely watched. It just dipped negative, of course, as I was saying all that. Down 43% in December alone. The real question at this point, too, is who's selling? Who are the sellers? Yeah. Are the institutions and the bigger believers in this story now the ones who are starting to capitulate a little bit?
I think that, it's first of all, you name it, who's selling. I mean, the CEO is selling a lot of it. The CEO who says ESG is a crock, basically. Guess who owned a lot of Tesla stock? ESG funds, right? On the way up. So I don't know if it's anybody in particular. I still think retail is the key swing factor on a day-to-day basis, or
I don't think we talk enough about that either.
Super-powered retail, meaning like, heavy kind of short-term traders, people who are in the options. And there is just this kind of unwind of a lot of these names that really did dominate on the way up. So you have all this market cap in there from people. First, people who sell it are the ones who are buying it just because it was going up, because it stopped going up. And then that kind of works in reverse. And as we said, if you want to buy it on a fundamental basis, is this the moment when you have widespread anticipation of consumer struggle and all the rest of it? Even just because it's, again, they sell expensive stuff, and we're kind of downgrading our expectations for what discretionary is going to do next year. All those things are in the mix. In terms of what levels matter, I think you really want to be very careful shorting it here, just based on how far it's down, based on the dynamics of January, which is laggards often spring back because you do have the selling dry up at the end of a year. And, based on the fact that it's just become a very sort of unpredictable spring-loaded situation just on the intensity and the angle of descent here.